Friends, the Honorable Prime Minister from the Red Fort on 15th of August has promised a GST Diwali-Bonaza for the citizens of this country. This has been triggered due to the geopolitical environment, and we all know the 50% tariffs which has been imposed by the USA on India, which would be triggered very soon. So the government wants to boost the domestic consumption, which would somewhat take care of the reduction in exports. In this video, we would discuss the 9 points which would trigger GST 2.0 in the coming months. In September, most probably we are going to see a very big GST Council meeting and maybe few more GST Council meetings back to back. And most important is how industry and trade should prepare for this GST 2.0 from now. First up, we all understand that there is going to be a massive GST rate reduction, and with GST rate reduction would trigger the anti-profiteering clauses. What is anti-profiteering clauses? All the taxpayers by now know when GST had come, anti-profiteering was triggered, and again with the reduction in GST, anti-profiteering would be triggered. It means that all the taxpayers whose output goods or services GST rates are reduced going forward, they have to make up their cost sheets once again and ensure that this reduction in GST rates would be passed on to the consumers and would not result in profiteering. So what needs to be seen is not only a vanilla pass on, say in case your GST rate on your goods or services is reduced from 12 to 5%. It may not be a vanilla 7% pass on by way of reduction in prices, because consequently the input tax credit may also be hit somewhere. So cost sheet needs to be done so that optimally the rate reduction should be passed on to your consumers, as well as the company should also not lose, so that the economy gains as well as the taxpayers and the citizens of the country gain. Now the 9 points of this GST reform, GST 2.0, are categorized into 3 parts, 3 pillars. First, pillar 1, structural reform, and the first part of this structural reform is the correction of inverted duty structure. For example, in pharma goods, raw material is 18%, finished goods is 5%. Lithium ion battery space, parts of lithium ion batteries is 18%, 28%, whereas lithium ion batteries are 18%. So this results in inverted duty structure and consequential blockage of working capital, which benefits nobody, neither the government nor the taxpayers. So this inverted duty structure would be corrected in most goods. Second is classification disputes would be reduced. How? By reducing the slabs. So 12% slab and 28% slab would be gone. No more 12 and 28% slab. Today we have more than 280 items in 12% slab in case of goods, and 40 plus items in case of goods on 28% slab. So all of this would go. Therefore, the classification dispute, whether a kesar lassi would fall as a dairy item in 5% or would be considered as soft beverage in the higher tax slab, these disputes are going to see end and sunset now, as has been disclosed and as has been confirmed by the Ministry of Finance in the press release and the press briefing just after Honorable Prime Minister's Red Fort lecture. Third, and very important for industry, is predictability and stability in terms of structural reform in GST. So the biggest problem and hardship to trade and industry today in GST is that in case the supplier does not pay the taxes to the government, then the recipient has to bear a reversal of such input tax credit. Now this, we understand, the Ministry of Finance has provided some kind of solution to this problem, which the group of ministers is considering. So this, we understand, would, in case this issue is resolved, then it would result in more stability and predictability for the consumers and trade and industry who are facing tremendous hardship on account of this in terms of clause 16 subsection 2 clause C of CGST Act. Second pillar, rate rationalization, which is the most talked about, and the ministry has clarified that rate rationalization, rate reduction would be done on common sense logic and not on the logic which was done in the legacy regime. This may result in a small loss of revenue to the government, states as well as center, but it would be made up by the increase in consumption. However, the compensation cess, which we all know now would be removed from 31st of March 2026 and which today flows to the states as a compensation for loss in revenue, that would not be further compensated by the center to the states, and that would create a fiscal space so that the rates can be reduced. However, it is very important to see how this gap in terms of revenue for the states, which is created due to removal of this compensation cess, that would be taken care of so that the state GST departments do not become ultra active, and again we come back to the disputes and to the current scenario going forward. So, second issue in rate rationalization, first is the compensation cess removal. Second is that the items which are used by the common man, for example food items, medicines, they would be removed from the higher rate bracket to 5% or even exempt. So in case these are exempt, and in case you get an anti-profiteering notice for the food, those industries in the food and the medicine space, then you have to calculate the pass on to the consumers in such a way so that the ITC loss which is happening to you, that is also balanced, and a vanilla rate pass on cannot happen as far as trade and industry is concerned. Life insurance and other insurance would be reduced, the GST rates would be reduced from 18% to 5%. As I said, 12% items like for example solar modules, 99% of the items in the 12% bracket, they would be shifted to 5%. So all those taxpayers whose goods or services are in 12%, they have to have a relook. Please prepare your cost sheets from now so as to see the impact, so that whenever these rates, new rates are triggered, you are prepared to pass on as a rate reduction to the consumers. Items in the 28% bracket, they would all, or at least most of them, would come in the 18% bracket. Important among them are batteries, lead acid batteries, cement, etc. So we need to see what all items are passed, and these items, goods or services, you need to rework on your output prices as well as how much you are going to pass on to your consumers. There would be a sin slab, so to say, that is 40% GST slab for 5 to 7 sin items like tobacco products, pan masala, online games, etc. Only 5 to 7 items in the 40% rate brackets. So, trade and industry need to prepare for this massive rate rationalization. You need to be aware of the developments going forward. Third pillar, that is ease of living, not ease of doing business, but ease of living, because MSMEs who bear the biggest brunt of compliances, they have to continue their businesses in this dynamic geopolitical environment. So first up in this ease of living is registration. Today we see that GST registration takes 30 to 60 days. It is also important that adequate scrutiny is done while giving the registration, so that tomorrow these, specifically the new registrants, they do not close shop and create a problems for their customers. But a balancing act needs to be done, and we understand that it would be a new 3-day registration for taxpayers who are already registered for long time in other states. For fresh registrants, applicants, there could be a mechanism whereby there would be a limit or threshold on the ITC month on month which they can pass on for at least first 1 or 2 years of their existence. So registration would be streamlined. Second is compliances in terms of return filing. We have already seen auto-populated GSTR 1 and 3B, auto-populated 3B from GSTR 1 in August itself. Even ITC going forward would be auto-populated from GSTR 2B, and there is already an IMS which would take care of any amendments if anything required. So going forward, your 3B returns would be auto-populated. Nothing needs to be done after filing your GSTR 1. And third would be streamlining of the refunds, specifically the services refunds. Today a major problem in services refunds is the absence of FIRCs, because banks, due to RBI's 2016 circular, they are not issuing FIRCs, and the GST law still requires FIRCs. So this and other issues in refunds, they are going to be streamlined so that taxpayers get their refund in time. So friends, these are the 9 reforms which GST 2.0 is going to bring about just before this Diwali. Taxpayers over the next 6 months, they need to be aware and streamline their systems, their compliance spaces, so that they can make the maximum benefit of GST 2.0. Thank you very much for watching. Do like, subscribe to this channel. Stay tuned. Thank you very much.